When you have a loss of this magnitude, you're going to have changes there. Right now, you'll see some companies, they'll either have to be some large changes or you're going to see companies leave that market more than what already has left that market.
So a hot topic right now are the wildfires in California. And obviously insurance is coming into play in that. So how does that affect us here in the Midwest?
Yeah, a lot of people think national company like Travelers, who we write for, they think automatically that's going to affect my rates here. And that's not necessarily true, because what people don't know is a lot of your national companies will have smaller companies within their companies, meaning they will take California and make that its own business, its own entity. They'll do the same down in Florida. And then in the Midwest, they'll put a couple of states together that are similar and kind of make their own company there as well. And then when it comes to rating those areas, those rates won't necessarily, they won't take into consideration those risk factors, if you will. Like the fires out west, we don't have here, so they can't necessarily rate for those. The piece that isn't considered is the reinsurance market, which most people aren't familiar with, but basically insurance companies out there will buy insurance for really large losses. And so if they have large losses, then they have to tap into their reinsurance market, or their deductible is that large loss. So those rates are going to go up. So you could see insurance companies take a little bit of rate because of that. But I don't think we'll necessarily see a drastic changes here in the Midwest because of those fires out west.
Yeah, a lot of times I have people call for quotes, and sometimes they'll say, I only want to be quoted with regional companies. Like some of our companies are, they only write in 13 states, mostly Midwest. And I just tell them that, like, even though they're a national company and they're all across the United States, you're still getting rated for where you live, because if that wasn't the case, then they wouldn't be profitable here. We wouldn't even be able to write business with them, because their rates would be too high and nobody would be writing with them. So they do that to keep rates more in line with the regional companies, or there's no point for them to even insure in Indiana.
Yeah, I mean, that's the nice thing about we have a lot of options in Indiana, and that competition helps keep those rates down. Obviously, each company has their own appetite, because a lot of times we'll get that question. It's all the same coverages, but each company has their own, comfortable appetite for risk. Meaning, if you live far out in the country, there's a company that would be like, hey, we like that risk because you're not by other houses. Another company may be like, I don't like that risk because you're pretty far away from the fire department. So each company has their own risks that they like or that they're comfortable with. And so that's why we represent multiple companies, so we can find that right fit for our clients in the right company.
But I am curious to see how the wildfires in California do play out and how it will change the insurance industry in California. I know it doesn't really have anything to do with us here, just because with all the hurricanes and stuff in Florida, things have really changed down there, with some companies not offering wind or hail coverage, some requiring very high, like tens of thousands of dollars deductibles down there, just basically making the homeowner responsible if something happens, just giving them more responsibility there. So it'll be interesting to see what happens in California too. So
they'll definitely have some changes out there. I mean, when you have a loss of this magnitude, you're going to have changes, especially with their current insurance laws they have out there right now. You'll see some companies, they'll either have to be some large changes or you're going to see companies leave that market more than what already has left that market. Thanks for watching this video. If you enjoyed the content we provided today, click right here and watch some more.